This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz, and today is April 5th, 2021, and this is show number 238. So, Nick, we've seen these markets. They just keep going up. Is this proof that if you just pour infinite money into the market, it'll go up forever?
Well, it looks that way. It certainly appears that the markets continue to climb higher each and every day. On Friday, we did have that BLS, Bureau of Labor Statistics. They released their non-farm payroll report for the month of March. The number was better than expected. And it looks like everything's paying off. You got a lot of what I call euphoria out here. Everybody thinks nothing can go wrong. I'm not in that camp, as you know. But right now, markets are going higher, and that's really the bottom line. You can't fight the tape, so to speak. So again, good rally today. We're starting out higher across the board, and we'll see where it takes us. But I think we got major headwinds. I've been warning everybody for really since the start of the year, and we've had some pretty sharp declines, and then only to see them get reversed back higher. So I think this will be another one of those scenarios where you're getting another another rally here, but it's going to be met with some selling pressure shortly.
Hey, and let's not forget, on Friday we had a holiday weekend, no trading, so Thursday was really the Friday, and Thursday the market kept going up.
Yeah, Thursday we rallied again, and then Friday the futures market was open for a limited period, and that actually is what we're seeing today after the big job report number. Job report number, I believe, came in at 916,000 new jobs. The biggest gains were in hospitality and construction. That makes sense since a lot of states have reopened. But either way, we're getting way ahead of ourselves. I think the market is looking. The participants in the market are looking forward to the economy reopening, but what they're not looking at least in my opinion, at this stage of the game, is simply the debt load that we have now. And besides the debt load, you have lots of froth out here with numerous secondaries constantly. We have now these NFTs out here, tons of IPOs. Just the debt load is just becoming overwhelming. But what people don't realize is that yields are going up as well, and bond yields should continue to climb, in my opinion, throughout the year, even into next year, and that makes debt more expensive. So even though it's still relatively cheap compared to what it was, say, back in the 80s, but it becomes expensive when you take on such heavy debt.
Yeah, exactly. There is a limit to all this. There's a limit to how much good all this debt, taking it on, does to the actual economy. And initially it might help a little bit, but in the end it becomes a drag on the economy. We've never had a situation, though, where the Fed eventually didn't pull back. This could be the one time, Nick, where the Fed just keeps the pedal to the metal and bad things can happen.
That's right. And I think it's worse. It becomes a worse car wreck if they keep the pedal to the metal. The market will eventually make them have to signal, at least maybe jawbone for a while before they do anything. I don't see them doing anything as far as raising rates, but the market will probably make them come out and say something that will anticipate a rate hike in the future. That's kind of how it works. At some point, right now, it doesn't seem like there's any issue, any problem. Everybody's just loving the markets going up. And in all fairness, I got longs out there too. I don't mind that, but I just know that these parties end how they end. I've seen them before, and I think the clock is ticking already. We're probably at that point now where the euphoria is just overwhelming. You have countless secondaries, you have SPACs, you have now NFTs, we have higher yields, higher debt. I mean, at some point here, this is not a market that is sustainable.
No doubt at some point, but we haven't hit that point yet. Isn't that interesting? And I don't know when we're going to, but I think you're right. At some point we will. Energy's been on the weaker side today?
Yeah, surprisingly so. If everything's so wonderful and people are back, we're seeing a pretty good hit in energy. You have crude oil today get down about $1.80, $1.78 as we speak. And then you have most of the leading energy ETFs. I like to follow the XOP, which is the S&P 500 oil and gas exploration and production ETF. That is down by almost, by 2.7% right now as we speak. So that is getting hit. The XLE, which is the S&P 500 Select Spider Fund, that is down about 1.6%. And then you have Exxon, Conoco. All of these are lower today. And then you have the oil services names lower as well. The OIH, which is the oil services ETF, down about 2.7% as well. So we're seeing a pullback in the energy space today, and that's been a leading industry group in 2021.
Interesting. So, so when the leaders rotate, that's time that you really need to be aware.
Yeah, I mean, there's warning flags everywhere. Now, the major indexes are going higher, but let's not forget that we've seen, many stocks and many sectors take big haircuts already. I mean, it's not natural to have moves like we've seen forget GameStop and things like that. We've talked about that in the past. But recently we talked about that Archegos hedge fund that, really had that big margin call. And it really had no effect on the major market indexes simply because I guess the central bankers came in and saved the day. But you look at a stock like Viacom or Discovery, these are two equities that they were involved in. I mean, these stocks have gone, Viacom went from $100. First of all, it soared to $100, and now it's at 43 and change. Discovery went almost to $80. Now it's at 41 and change. I mean, these are just not natural moves to have 50% haircuts in 4 or 5 trading days. If anybody thinks that's natural, they should contact me, and I'll show them evidence that it's not. But when you get these kind of really ridiculous type of activity going on and on for so long, there's some dislocations out there that have to be fixed. So, again, we may just, chop around here in the month of April. April is historically a bullish month, but I'd be very, very careful in this market right now. And I'm telling everybody that, and even my own members, and we have longs out there, but, that's why we move our stops to break even as soon as we hit target, because you have to be really, really careful in this kind of environment.
Yeah. Caution is the byword. Hey, what's gold and silver doing today?
Yeah, so today we have a pretty flat gold market. Gold futures are just down 70 cents as we speak, trading at around 17.28. And then we have silver futures today basically down about 7-8 cents. So very, very calm market there. The GDX, which is the gold miners ETF, that is up about 26 cents as we speak. But again, very flat day for gold overall today.
So miners, gold, and silver are pretty flat, huh?
Yeah, very, very flat today, which is good. I don't have any issue with that. I love what they did last week. They went back down, tested the March lows, came off those lows with a vengeance, and now we're just putting in a little bit of a pause, which is great. Maybe they could build a little bit of a base here that really tells me that, gold can go test that 1800 level on the futures.
Yeah, it's funny the way that works, that before they're really going to go high, they always crash lower, and then they rebound, they find a base, and then from that point, they're going to go higher. It looks like it's all set up here to do it.
That's what markets do. It's amazing. But, again, if you're not there to really recognize the patterns, I can't tell you how many people last week were freaking out. And, basically I was overwhelmed with emails saying, hey, gold is crashing. How low is this thing going to go? And I said, well, it didn't really crash. It's just retesting the lows from March just below 1700. And possibly I think we have a W pattern forming, which tells us that's a very bullish formation where you get basically a double bottom and it's shaped out like a W. And, once you pass the midpoint from, I guess it was March 18th, that was around 1750 area. Once you get through there, I mean, this thing's off to the races.
Yep, I couldn't agree with you more, Nick. It's off to the races we go. And you should go off to inthemoneystocks.com. Take a look at Nick's trading record. The big trade is still there. It's just kind of sitting, waiting, Nick, you know?
We're just on hold mode here now. And again, there's a few things you got to look at in the charts. And once these charts tell you, then you really just, you hit the button. And again, it's more about time than price at this stage of the game. But we've got lots of good things going on. And this 2021, I called it the year of trading dangerously because it's not going to be an easy year.
Yep, the year of trading dangerously. I like that. And that's the headline of this episode. So go over to inthemoneystocks.com. Make sure you follow the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. And please send your emails to kl@kerrylutz.com. We'll get to them any day now. Nick, hey, have a great day. We'll talk to you tomorrow.
Thank you, Kerry.
And so concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. Be sure to go to his website, inthemoneystocks.com. Don't forget the Twitter feeds at ITMS and at Nick Santiago01.